Hello, welcome to the Women and Money video series from Fidelity International. My name is Stephanie Spicer. I'm from What Investment Magazine, and I'm going to be talking with Emma-Lou Montgomery, who's Associate Director for Personal Investing at Fidelity International. Emma-Lou, hi.
Hi, hello.
We've talked in a previous video about how do you start tackling this issue of women, frankly, not saving enough, not investing enough, not getting to retirement and not having enough of a pensions pot. It's a perennial problem. You will probably start to explain just what kind of a problem it is. But in terms of encouraging people to start investing, HMSC have recently said that people are investing more in ISA schemes. More people are investing. This is good. More people are investing in cash ISAs. Now, we'll perhaps get on to the reasons why that's perhaps a little understandable at this point in time. But women especially invest more in cash ISAs, we've told. They don't seem to be going to the stocks and shares options. What are the implications of that? Because that's a bit of a problem, would you say?
Definitely, it is. Yeah, we have noticed there is a tendency for women to actually tend to steer away really from stocks and shares and tend to think that cash is safer because it's perceived to be less risky because they haven't got the ups and downs, which you obviously get with investing in the stock market. The only problem here is, though, that women are actually leaving themselves exposed to more risk in a way, because cash at the moment is, you're not going to earn anything in the bank. We're in this lower for longer interest rate environment. You've got inflation eating away at the money you might actually make in interest anyway, which is, to be frank, quite a pittance at the moment. And so for women who are investing over the long term, there's a real problem that money is actually going to be, the value of it is going to be eroded by inflation and the fact that you're really earning nothing. So women would be better off by far investing in stocks and shares rather than actually investing all that money in cash. Obviously, you want to keep some money in cash because everybody needs a rainy day fund. And if you can have something like 3 to 6 months money actually in cash, and then you know that you've got that money should you need it, that's perfect. That's a perfect starting point. But beyond that, when you're investing for, say, 10, 15, 20 or more years down the line, really looking at stocks and shares is a far better option. Investing in funds would serve you far better and give you potentially far greater returns. And obviously women tend to live longer, so that money has got decades and decades potentially to grow. So that gives the chance for it as well to iron out sort of any lumps and bumps that you typically do get by investing. So yeah, the women tend to be very sort of risk averse, but by doing that are actually exposing themselves to more risk by not actually investing wisely in stocks and shares and holding it in cash instead.
Now, it's going to sound a bit of a sort of oversimplified question, because cash we all understand. It's what you've got in your purse, your wallet, under the mattress or wherever you got it. We're saying, well, you need to go to stocks and shares. How do we get them to do that? It's one thing to say invest in stocks and shares or invest in equities. How do we explain to people, to women, what these are? If they've got an aversion and they've got it for a reason, and you've outlined, well, these are sort of quite understandable reasons, how do we get them out of that mentality into stocks and shares? When somebody says to you, well, what's the stocks and the share? How do I do that? What would you say to them?
Yeah, and that is part of the problem there, Stephanie, as well, because it's seen as, stocks and shares are very much seen as sort of male dominated. It's very much, it's sort of like almost like something that women don't know about, shouldn't know about, and really don't have any interest in. But the fact is that when women do invest in stocks and shares, they tend to be better investors because they tend not to sort of fiddle around as much, and they're not sort of chasing a quick buck as such. So how to get them into it, I think, is you've got to start small. You've got to start not throwing in, thousands of pounds into a specific stock or something like that on the stock market, but maybe doing something like in your ISA, rather than going for a cash ISA, go for a stocks and shares ISA. You can invest as little as £50 a month, say in a Fidelity stocks and shares ISA, and you can then choose from a range of funds to invest in, which means that you're investing in the stock market. But if you're a complete novice, that's fine, because there's plenty of funds that you can choose. We've even got something called the Select 50, where we've actually picked the very best funds, and they come from all sorts of, in all sorts of categories, all sorts of different assets you can invest in, all sorts of geographies. So you could invest in the UK, you could invest in gold, you could invest in emerging markets, whatever you like. But the beauty of it is it's in the hands of a very experienced fund manager who will actually do all the picking and choosing for you. So you're sort of making tentative steps in investing that way. So you're putting in, say, £50 a month, more if you can, if you can invest more, fine. But that money then will grow nicely, and then you can get a sort of taste for it, I think, without going the whole hog, without having to even particularly, understand the ins and outs of investing in the stock market. And over time, you should see that grows, nicely, and gives you confidence to actually invest more money in stocks and shares. So I think it's just encouraging women to actually dip a toe really into stocks and shares investing, and realise that it is something for them and something they should be doing.
Well, it's interesting you're saying that, because I'm sure I had a statistic somewhere, and of course it's never to hand, is it? But it's quite a phenomenal amount. If you're talking over a 5 or 10 year period, if you are just invested in an ISA, or the same amount of money invested in a stocks and shares ISA, and we could talk, you say, about 10,000, but we're talking the difference between a couple of hundreds of pounds in a cash ISA to thousands and thousands of pounds over the same period of time if it's invested in stocks and shares. That seems quite phenomenal. But
yeah, absolutely. And it basically comes down to the fact that, especially at the moment, you're just earning nothing at the bank in cash. We're in this lower for longer interest rate environment where people are barely earning any interest really at all on their money. And then you've got the fact that inflation is actually eroding the value of that money as well. And so investing in stocks and shares over the medium to longer term is definitely proven. So many studies have shown time and again that it's actually a better way to actually build the amount of wealth that you would want to see. You want to see returns that you're going to get on stocks and shares, which you just will not be able to achieve in cash. And I think the other thing to remember is that the £20,000 annual ISA limit is great, but it's put a lot of people off because people think, I haven't got that sort of money. But you don't have to invest the 20,000. You don't have to invest anywhere near that. You can invest £50 a month. You can invest whatever you can, and that just builds up nicely. So, the returns are definitely, the potential returns are definitely far greater in stocks and shares than they are in cash. And as women in particular, when we're looking at having a longer time horizon and needing to have more money for a longer life, say post-retirement or whatever, in our twilight years, whatever you want to call them, then it's important to actually make sure your money grows the best that you can do, and not plump for what you think is a safer option in cash, but where your money really is going to be languishing and not really working for you in the way that you need it to.
Now, you saying that, I was about to interject with, however, what people will say is, yes, but it's more risky. If it's cash, it's safe. It may not grow, but it's safe. But something that you alluded to earlier in our discussion was that women, once they start investing, tend to not fiddle around. They tend to stay the course of it. So would this be the argument? Yes, arguably there is a risk within stocks and shares, but it's the long-term game. Is that right? That overrides that risk element, or can override that risk element?
It certainly is. I mean, if you put money into the stock market today and then want to take it out tomorrow or the day after, that would be incredibly risky, because the market may have gone up a lot, but it may have gone down. And so you really then would be sort of playing with fire and having to time the market, which, as any experienced investor will tell you, is really impossible to do successfully. Whereas if you put the money away, leave it there to invest and to grow, that should give you far greater returns. And time and again, we've seen that it does. So it's over the sort of 10 to 15 year period onwards, that money should really grow nicely. And I think it's very important that people aren't sort of scared of that. Yes, there are ups and downs in the market, but if you leave it over a period of time to actually ride out those lumps and bumps, it should sort of even itself out and you come out with a great return. And like I mentioned, women tend to be better investors when they do invest in stocks and shares, because they're not after that quick buck, and they don't tend to sort of tinker with their holdings as much as men typically do. Not being sexist, but the studies sort of show that women have got a much more of a sort of an invest and hold approach, which so many actual experienced, professional fund managers also adopt, because they know that by staying invested is far better over the longer run than it is sort of dipping in and out of the market and trying to sort of grab a high and invest on that and then sell it and take a quick profit. So it's actually better to stay invested, leave the investments there to grow.
And when women start investing, do you? I mean, it may not be the case that you see this. Is there a particular way in which they invest? Are they low risk, medium risk? Are they more adventurous? When we talk about them, once they've embraced that, they're almost empowered. Okay, I understand that I'm not freaked by it. I'm starting to invest. What's the average woman investor like? Can you answer that? I mean, is it typical or?
Well, the only typical thing I know is that women do tend to sort of, generally on average, become, are better investors because they don't take that sort of trying to make a quick sort of buck on the back of what they've invested. So they're not tending to go for day trading approaches and things like that. They do tend to invest for the longer term. Women also, I mean, obviously everybody's different, but women also on the whole tend to invest more for a set goal. So they'll put the money aside saying they're investing for, I don't know, for their wedding, or they're investing for a child's education or for university or something like that, or for buying a property. They tend to set that money aside and leave it there, which is, I think, part of the reason why they are successful with it, because it's not money they're playing with. It is money that they are setting aside with a goal in mind. And I think actually having a goal is a really good way of investing, because then you aren't tempted to sort of dip into it, because if you do, you're throwing all your sort of future hopes and dreams off track as well. And I think that's probably where women tend to have the sort of advantage, setting that money aside with a much longer term goal in mind and sticking to it.
Right. So commit yourself to save, commit yourself to take a little bit more risk, but you don't have to be taking huge amounts of risks, and keep that goal in mind so that it keeps you investing.
Absolutely, yeah. Keep your eye on the sort of longer term goal. And I think that's the key. Thinking longer term, staying invested, and just sort of riding out ups and downs and thinking ahead, because over the longer term, 10, 20 years, 30 years down the line, that money will have grown nicely.
Perfect. Thanks very much, Emily.